Jahangir, so good having you. Thanks so much for joining in.
Sure.
You know, I so badly wanted to talk to you, Jahangir, immediately post that PM meet as well, and we'll come to that. If not minute details, then just the broad brush view. But let's start off with the world view, Jahangir. All eyes on Fed and a lot of opinion on how even if the Fed makes a move, it will probably be a relief that they've finally made a move, and markets might well likely applaud that move as well. What are your thoughts?
Yeah, I mean, so, we've been living in this world of uncertainty for quite some time. And, in worlds of uncertainty, people do keep cash aside, do not sit on the sideline, do not want to enter into the fray. So my sense is that, look, if the Fed does move on Thursday, and most likely when it does move, it will move with the message that they're moving now because they want to move in very small steps in a very gradual normalization of rates. And I think that will be taken by the market as a very big positive. The uncertainty has been resolved, and you should see, once again, risk being put on emerging markets, and obviously India will benefit from that. So yeah, I mean, so broadly, that's where we are. Again, it's going to be a very close call because there's a lot of, going into this meeting. If you hear the other members of the FOMC, it wasn't very clear that everybody was on the same page that this would be the month in which they would start the liftoff.
Right, Jahangir, morning. Nikunj Dalmia also joining. And do you think, Jahangir, markets are unnecessarily obsessed with the Fed move? I mean, if Fed does not move in September, it will move in December. If not December, maybe early Jan. Rather than focusing on the first stop, which is when Fed will move, do you think we should focus on the journey, that how strong would be the next hike and the subsequent hikes?
I think that is correct, and I think that whether it moves in September or whether it moves in December, again, it shouldn't make much of a difference. And I agree with you that it is the pace of normalization that is far more uncertain than the actual date of the move. And the reason why we think that the pace of normalization is uncertain is because it is very difficult to see, 2.2% to be U.S. potential growth, which is what the Fed has. By all measures, potential growth in the U.S. is probably significantly less than 2.2%, probably somewhere around 1.5, 1.75%. But if that's the case, which is based on what is happening to labor productivity, if that's the case, then the output gap that the Fed thinks it has, and therefore the time it has to make a very gradual, slow move might be overturned somewhere, let's say, in the second half or the first half of next year. So we are a bit uncertain. We are a bit concerned that while the Fed may want to move in a very gradual steps, the market developments will not let it move that gradually.
What about China then, Jahangir? Has the dust settled down, or do you think it's going to be too soon to make such an assumption post what the ministers had to say on the sidelines of the G20, that perhaps the bubble that was taking place in the equity markets, that has settled down? Do you think it's still a Pandora's box? Or do you think one can sort of sit back and relax on news flow from China?
For a long period of time had been warning that, look, the manner in which they had been funding their growth by, underpricing input prices, doesn't really matter what input price, land, capital, et cetera, et cetera, et cetera. All of that had created a significant amount of inefficiencies in the system, which is reflected in the massive amount of debt that the banking system has, questions about the quality of the debt, and in the last, I would say, 40 months, is this massive excess capacity in the manufacturing sector, which has resulted in 40 months of straight deflation in PPI in China, running in -6 at this point in time. So these are sort of the side effects of a model of growth that was based on these kinds of underpricing of inputs, and I think that's where the concern is. So as growth slows down, the concern is whether or not macro policy makers in China, basically fiscal and monetary authorities, will be able to keep all these imbalances from not spilling out in the other parts of the economy. And from our vantage point, I think the biggest concern we have is that there is a looming fiscal drag that is part of the fiscal reforms that were started last year. And we haven't really seen much of a move in that direction to take out the fiscal drag. And if it does happen, then fourth quarter of this year and the first quarter of this year could see a significant decline in growth.
Without getting into specifics, I don't know how much you're at a liberty to talk, but how enthused were you at the end of the meeting with the PM, which happened about a week ago?
Look, I mean, it was, I mean, you've heard, a lot of people talk about it. The finance minister gave a press conference, and I don't have very much color to add to that. And I think, you had a whole bunch of people expressing their views. And some of those views obviously were very specific to the industries that they represent. Other views are more broad brushed. So my guess is that, I think the government got a sense of where this cross-section of bankers and economists and corporates stood on the global events that was being laid out, and I think that this will probably be some sort of an input in the way in which the government thinks about both the rate hike, upcoming rate hike, China slowing down, as well as the structural decline in oil prices.
Jahangir, retail inflation has eased to a good 3.66% for the month of August. Do you think it's a given what the RBI's next move is going to be, or do you think Rajan is going to wait and watch as to what Fed has to say and then take a decisive call?
Look, clearly what happened on Thursday will matter. If, for example, there is a lift-off takes place and the market is very comfortable with the lift-off, given whatever the Fed says, then I think RBI is in a much more, less concerned about what might happen to, if India cuts rates. So I think he will be much more relieved in trying to deliver a rate cut. If there isn't a rate cut, it is difficult. You're still in this uncertainty. You don't know where things might turn out. I'm guessing what happens on Thursday matters. But clearly what really is the driver of whether or not there'll be a rate cut or not is what has happened to inflation. If you recall, in the past policy review, they had a path of inflation. That path of inflation suggested that the bottom would be in August at 4%, and then it would start moving up. We've seen the bottom happen 2 months earlier. And therefore, I think they will be forced to reduce their January target from close to 6% to closer to 5%. And that should logically suggest that there is a rate cut in the pipeline, whether that's on September 29th or whether it does intermeeting and sometime in October. That's a matter that will be decided by the Fed policy.
Well, Jahangir, really appreciate your time. Glad you could join us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.